Andreessen Horowitz is today the largest venture capital firm in the world with over $35 billion under management and investments such as Facebook, Twitter, and Airbnb. How did the upstart venture capital firm turn the industry upside down and come to dominate what seemed like an extremely competitive market? And what was the role of the almost never mentioned third co-founder, the so-called
Queen of the Silicon Valley?
The usual history of a16z's is that it was founded by two partners. One, the billionaire Marc Andreessen, who co-wrote the first browser, and Ben Horowitz, who's universally admired by hardworking entrepreneurs. However, there's a third co-founder that arguably deserves more praise than either of them. She's been called the greatest spin master by Wired, credited as the architect of Silicon Valley and the queen of Silicon Valley. Yet the other two are two of the most famous people in Silicon Valley, while her fame seems limited to just insiders and journalists. Despite this, it is unlikely that Ben Horowitz would be the household name he is today, that a16z's would have attracted the deals that they wanted, nor that the stock prices of their portfolio would ever have reached the levels that they did. Yet when it is mentioned, her impact is almost always criticized. The blame often goes directly to her when the valuations of their portfolio companies seem the most absurd, when they're attacked for focusing more on media than investments, and especially when the first few years seemed like an endless rant of self-promotion.
We're outsiders, we do things differently, we try to change the world, we try to be disruptive.
Today I'll dive into the least known, but arguably most important of the co-founders of what have become the largest venture capital firm in the world. To really understand the venture capital industry, we must first understand the nature of the industry from its inception in the 1950s up until Andreessen Horowitz was founded in 2009.
The landscape of venture capital firms at the time, top 4 or 5 firms, was basically etched in stone.
It hasn't changed in like 20 years.
And guess how that list marketed itself? With the logos of the companies they invested in. It's basically reference selling.
Andreessen Horowitz is now one of the better known brands in venture capital, but that wasn't obvious that that could happen. The ranking of VC firms doesn't usually shift around a lot.
Silicon Valley did not do a particularly good job of explaining itself.
Usually the way firms market themselves is, well, A, they don't actually market themselves. It's a bit of a black box. And then number 2, their calling card are all the other deals that they've done. Well, we didn't have any of that.
So how did Margit end up joining the firm?
I co-founded the Outcast agency, and one of our first clients ended up being Salesforce.com. That helped us build a business around that client and then many others, including Facebook and whatnot.
This was the moment when Mark and Ben came to Margit and asked her. They didn't just want to build a normal VC fund, they had a different idea. They wanted to be closer to a talent agency than a venture capital fund, and they wanted someone who was very good at communications and very good at PR to do this.
Ben had just left HP, and they were both angel investing. So I thought, well, maybe they'll do potential referrals. Then they said, well, we're going to start this venture capital firm, and we're going to launch it next year.
With Margit on the team, they took the industry by storm. Every other firm only hyped their portfolio when they were about to IPO and never did marketing for themselves. They were on the front page of every major newspaper, wrote industry-defining opinion pieces, and won major deals against the incumbents.
Meanwhile, we keep talking about it. That's part of the genius.
The things that matter in venture capital is seeing the deals, picking the deals, and winning the deals. In the early days of building the Andreessen Horowitz brand, we did a lot of press work. Hopefully that will make us attractive to entrepreneurs. And that's what our business is all about.
We do PR, and some VC firms don't do that. There's sort of a philosophy around that. And if you're a communications person, your best chance is to participate in the dialogue and massage it.
a16z now had the setup they were looking for. Yet the industry hadn't seen a new challenger in a while and doubted that they could pull it off, however impressive their past.
Mark's like, we want to properly announce it. We want to treat it very seriously. We want to make a statement. Can you help us do that?
This woman is coming to us and saying, like, so do you want Fortune or do you want this cover? And they're just like, oh my God, this person knows what they're doing.
You can't get something if you don't ask for it.
And what I also appreciate as an editor is that they weren't actually straight press releases.
Well,
they talked
as
about
you
the
know,
investment.
Well, nobody reads press releases. And then we decided to launch the firm, and we did the cover story. We did lots of other interviews and whatnot. In the beginning, it was all about having the chance to compete for the deals, right? Mm-hmm. And therefore, we were loud and proud. But like
a lot of people kind of assume this is an easy game because it's like, oh, it's Marc Andreessen. It's like a given.
The asset was, Andreessen had co-invented the browser. The challenge of that was, Ben's brand was just not as big, right? Everybody who thinks that Ben is so amazing and famous and whatnot, he's great. She made him. His best format is writing. He's a very good writer. And so the first book, the media interviews, the Forbes cover, right, on him. And she's at it again because she's doing his second book, right?
Back in 2009, just a few months after the firm had launched, a deal appeared. They were still at the time working to build a brand which could compete alongside top-tier firms like Sequoia and Benchmark. When they closed the first fund of $300 million, they immediately invested a sixth of it into buying the telecommunications app Skype. Then they helped Skype connect with Facebook, where they were also investors. Facebook ended up picking Skype to provide video call capability for its messaging service, Facebook Messenger. Within a year and a half, Microsoft acquired Skype. Thereby their shares cashed out at $153 million, about 4 times its initial investment.
So the first investment in Europe was actually not a venture investment. It was the buyout of Skype, and then it paid off about 2 years, was a nice return. So that kind of made people pay attention.
This wasn't the only massively successful investment they made in their early days. Another standout investment from their first fund was Okta, a user authentication company. a16z bought 20% of Okta for $10 million. When Okta later went public, their stake turned into nearly $2 billion. Only a year and a half after their first fund, they raised $650 million for their second. At the time, the idea of launching a $300 million fund one year and jumping straight into the second one the next year seemed crazy to most established firms. The second fund put their total capital under management at nearly $1 billion. The annual fees of $16 million gave it plenty of space to expand its services and recruit even more talent, especially marketing, which was still a foreign concept to most other VCs. The firm then invested over $80 million from its second fund into tech giants like Facebook, Twitter, Airbnb, Pinterest, and Groupon. But they also put nearly $11 million into a Series B funding of TinySpec, a small gaming startup. TinySpec's CEO soon realized his game wasn't gaining traction, so with their blessing, he used the money he had raised to pivot the company's focus. His team had been developing an app for workplace communications. They found it so useful that they decided to put all their efforts into designing a friendly UI and taking the product to market under the name Slack. When Slack went public, its market value shot up, turning their stake of just $11 million into more than $3 billion. At the beginning of 2012, just over a year after the second fund, they raised $1.5 billion to launch the third fund. The fund represented 7.5% of all venture capital raised that year worldwide, and a16z was thereby finally in the major leagues. They kicked off the third fund by buying just over 10% of GitHub, an internet hosting company for software developers. At the time, this was the largest Series A funding in history. When GitHub was finally acquired by Microsoft, they made over $1 billion on the investment of just $100 million. During the fund, they also invested $25 million into Coinbase, a crypto company. When Coinbase went public, their stake was worth $11 billion. Overall, the fund invested in 173 startups, including Oculus and Lyft. The fourth fund was no less impressive, and they thereby reached $4 billion of assets under management. It includes notable investments such as Reddit, BuzzFeed, Instacart, and Magic Leap. By 2015, Andreessen Horowitz seemed unstoppable. From 2015 to 2019, they closed 2 general funds, 2 bio funds, and their first crypto fund.
You know, Steve Jobs famously said, "I'd rather be a pirate than join the Navy." Now you go from pirate to running the Navy very, very quickly.
In 2020 alone, they closed more than 4 funds and invested more than $6 billion. One of the most important investments in 2020 was a social gaming platform called Roblox. Within just a year, Roblox went public. Today, a16z's stake in the company is worth over $1 billion, nearly 15 times the initial funding. Another important 2020 investment was a $12 million Series A funding of Clubhouse, a social networking app that focuses on audio and chat. The following year, at its Series B round, the app's value hit $1 billion. In 2023, the firm estimated its total assets under management to be around $36 billion, generated from just $8 billion in initial investments. To say that Andreessen Horowitz was a success is a massive understatement.
With great power comes great responsibility.
They had closed 15 funds in less than 12 years, had overtaken an industry that usually doesn't allow new entrants, and had already made tens of billions of dollars for their investors. But while Mark and Ben deserve much of the credit, the media machine built up around it by market was what allowed them to see the deals, win the deals, and exit them at overinflated valuations.
In addition to having the indirect channel, it is also important to have your own content. because there are lots of stories that, you know, a Bloomberg or a Wired will never care about, but that are important for your customers to hear. We did this podcast that's been incredibly successful, and those are not to compete with media, but that is so that we can tell stories that our entrepreneurs find interesting that are outside what might be written up in Fortune. Engaging with press is a little bit like selling enterprise software. It's a relationship and it's a long sales cycle. It's not a transaction.
But is this so bad? The story of Groupon, Clubhouse, and Substack suggests so. In 2010, Forbes called Groupon the fastest growing company ever. In 2011, its IPO was the biggest internet coming out party since Google, raising $700 million at a valuation of nearly $13 billion. On the day of its IPO, Groupon's share price closed above $16. Today, Groupon's split-adjusted share price is around 20 cents, after having fallen by 99.4%. In venture capital, there are two ways to make money. One is traditional and difficult. Find and invest in promising businesses and then nurture them. Another way is to find a business, hype your investment, let its valuation balloon, and then offload it further down the line.
We are 100% confident every time we make the investment that it's going to be a big company. We are wrong a lot of the time.
Of course, our founders are perfect, all of them.
We're trying to do the moonshots. Every once in a while, we're going to have rockets blow up on the launch pad.
a16z did the latter with Groupon, dumping its share as soon as the lockup expired. But focusing on a few companies might miss the point. a16z invests in hundreds of companies per year and has a clear strategy of only expecting 10% of them to succeed. Of course, they believe in the investments when they do them, and to talk about them is not necessarily disingenuous.
For most forms of investing, the mistakes are the investments you make where you lose money, right? In our world, it's the investments you don't make.
The Hard Thing About Hard Things is one of the best management books ever written, and their publicity has allowed many people to have a much greater understanding of how Ben, Mark, and the rest of their team could contribute. Meanwhile, our understanding of the views of the key people behind Sequoia, Benchmark, or Founders Fund remains much worse.
The stuff that people talk about you, that is your brand.
If you were to get a key partner in your business, aren't their viewpoints important? Isn't it great to know that they always believe in them and will say so openly? What do you think? Are a16z's self-promoters that prop up their investment values to obscene levels?
For those who want to participate and build and understand the future, I want them to go like, I wonder what Andreessen Horowitz thinks about that. Whether that is op-eds or podcasts or written decks or press interviews and any flavor, right? Like that is what the overall ambition is.
Or are they providing a platform for actually understanding their values, view of the market, and how they can help their investments? If you have a view on this or any ideas for the next videos, leave a comment below. I'm currently working on 2 new videos. So if you enjoyed this one, ensure to stay tuned by liking this video and subscribing to the channel. The first video is about the first investment bank to go public and how it shaped the entire financial industry as we know it today. The second one tries to make sense of the creator economy. Is it just the largest 1% of creators that are benefiting? Or is it really something for the 99% of us?